Shares of AutoNation also on the move after reporting earnings that came in above expectations. The shares, though, actually, let's see, not doing moving a lot, actually. But in terms of its report, showing strong demand for new vehicles and services outweighing slowing used vehicle sales. I mean, in terms of they had better than expected revenue. Revenue was $6.9 billion nearly. So that was, the street was looking for a little over $6.7 billion. So
it wasn't really changed year over year, their revenue. But as you said, it did come in ahead of estimates. Earnings per share also came in ahead of estimates.
But lower than lower than a year ago. 602 a share to 648 a share.
So the company sort of seeing some different dynamics at work in the car market. We've talked a lot about that in terms of pricing here. Used vehicle deliveries down 11%. And new car sales up 12%. So the dynamics are shifting once again. It was for a while, especially during the pandemic, places like AutoNation couldn't get the new vehicles at the pace that they wanted. And so then they relied on used cars.
Vehicles, which saw huge demand.
Right. And now that dynamic is switching back.
Yeah. And I mean, AutoNation saying their expenses, selling general admin expenses, were 63% of profit, whereas a year earlier it was around 50%. So something to watch, but echoing some things that we've seen with, say, Carvana and CarMax in terms of those numbers. And AutoNation saying demand for personal transportation is still strong. So, we'll see. I guess we'll continue to see how that holds up through the balance of the following quarters.
Yeah. And they're also, it looks like, making a little bit less per car that they sold. So that's also not great news for AutoNation. So it's interesting here. We're not, I guess that push and pull, lower profitability per car, lower deliveries and used cars, but beating on revenue and earnings. So like all of that equaling not much change in the shares.
No, but it kind of goes back to that theme that we've talked about in general when we're looking at earnings, this lower bar, and can they jump over that? Right. So yes, jumping over the lower bar and how they continue to hold up in the face of maybe possibly changing macroeconomic conditions.